Hello, thank you Black Ops traders for tuning in to this instructional video. As you've noticed, we have been making a lot of strides with the spreadsheet that you get, the daily sheet, and we've made some significant changes to it so that you can be able to scope out the beginnings of these magnificent pulse waves that we're coming into. You'll notice too on the sheet that we have a lot of dynamics changing in the global marketplace, and it's my belief that we're going to see some pretty magnificent super waves take place. And a super wave is where a first and second pulse wave, when they collide with each other, sort of like two storm systems or weather fronts, verging together. And when that happens, it creates a big like superstorm. Well, that's what we're seeing in the marketplace. This here is your silver futures, silver spot chart. You'll notice that we have had a nice up run since we consolidated within the Kumo cloud back here. And we've had some nice tremendous breakouts. Those of you who follow the sheet have realized some pretty substantial profits by trading the pulse wave system. A couple things I want to point out to you is when you're using this sheet, you're going to notice that you get your primary wave, your secondary wave signal, then you get your confirmed pulse wave signals, and then you get your daily signals, which is your weekly Q waves. You want to really pay attention to those Q waves and the 2-bar Charlies. As far as risk parameters go, and I'll start with the most risky first. The most high risk trade is the 2-bar Charlie, only because it looks at not just daily charts but weekly charts also to predict intraday wave patterns and price movement. So it's basically a day trading signal, and you generally want to be out by the end of the day if you can. If not, then you hold overnight and take profit by the next day's close. That's how that is designed. Sometimes though, the 2-bar Charlies are pretty substantial and very good at picking up the beginnings of breakouts. These light blue arrows right here are your 2-bar Charlies. You see the last one that we had back on February the 8th was key in signaling where the next breakout or the next pulse wave would be. And then we got another one on February the 16th. You see the CPW1, that's your confirmed pulse wave breakout. So you had a confirmed one here, and then you had another confirmed one way up in here. So this was not the top. We still had another breakout, and then we didn't top out until we got here on March the 7th when we hit the 3674 level. And then almost immediately afterwards, we have 2 inside days here, and then the market just crashes from that point on. So right now, you're looking at your major support is around here, and this is going to put you around the around 35.27. So that's your first support area. Your next support area is going to be here, and that's at around 30, let's say 3170 is going to be a key support. And then your next key support after that is at the 2630 level. And then of course your Kumo cloud is a young cloud just forming here, and that's going to be a long ways off. That's going to be down here. So I don't think that the market is going to get anywhere near there, so you don't have to worry about that. At 3088 and 2630, those are other key support areas as well. So you're fine for right now, but just remember, when you're looking at the sheet, you want to look at those significant areas. If we scroll back here, just to give you an idea of what I mean, here is your first pulse wave signal back here on the 27th of January. Then you saw the market broke out and then began to form a secondary wave on February the 2nd. The market still trended up, but did not break out into the second wave until February the 15th. See the confirmed breakout. Okay. But along those lines, after this initial thrust here, we got our secondary pulse wave signal on the 2nd. So as you can see, each continuation or each pulse wave that formed, the market moved up. Again, if we scroll back, you can get another idea of what I mean. You always want to trade the primary and secondary pulse wave signals first, because those are the ones that generally get triggered first. Not all the time, but most of the time. Here on the 7th of October of 2010, we had a pulse wave signal. Market didn't break out until the 10th. And then after that, we got a Q wave on the 12th. And then you go. So those pulse wave signals are very significant. Primary and secondary pulse waves, you place the ticket and then you don't worry about it. Again, here on the 12th of July of 2010, we got our first pulse wave signal. The market broke out, retreated back into the pulse wave, and then we got a secondary wave signal. Market didn't do anything but consolidate here, and then we kept getting formations here in the pulse wave formations. And then what happened? The market broke out again, then came back in, and then it wasn't until over here when we got that primary and secondary pulse wave signal. The market didn't hit it. We got the signal on the 19th of August, but we didn't break out until the 25th. So sometimes it takes a week for the market to build up enough steam to break out. But you do need to stick with the pulse wave entry points. All right, let's take a look at the sheet. Okay, when you get your new sheet, basically your new sheet is going to look something like this, and you'll see that in the new sheet you're going to get your signals are going to be right here. Okay, this is it right here, the pulse wave status. Under the pulse wave status is where your signals are going to be, and let me see if I can blow this up so you can get a better view of it. Okay, you should be able to see that a little bit better now. Okay, see it says pulse wave status right here, and then you see it's telling you what you're looking at. For instance, here in the cocoa futures, you're getting a possible third pulse wave, or what we call a super wave. That's when the primary and secondary waves converge and build explosive breakouts, and that's what I was showing you in the chart. Then here's another signal. This is your primary pulse wave signal. See, it says first pulse wave. All right. So you want to look at those power bowls. All right. That's the acronym APWBO. All right. The next type of signal you're going to get is where it says both waves 1 and 2. What it means is the market has now set into alignment with both wave patterns. So you have a first and a secondary wave that's ready and it's formed, and the market's waiting to break out, and it's most likely going to penetrate both of them, starting with the primary wave violation, then ending with the secondary wave violation. Another thing you're going to see here, you still have your 2-bar Charlies as you see here, and you also have your grayed out signals. And your grayed out signals, you're going to see a couple different things here with the grayed out signals. One of the first things you'll probably see is that it'll say NIP, TOP, that means not in play, but trail open position. System is still long or short from the last from the last primary pulse wave breakout. Okay, so you want to still keep a lookout for those. The only terminology that's really changed is just in the pulse waves themselves. You're going to get a signal that says either it's a primary first wave or it's a secondary second pulse wave that you're trading or waiting for, or it's a possible super wave. We've had super waves in cotton, we've had super waves in quite a few things, also in Amazon, just all across the board. They've been all over the place. So you just really want to read your pulse wave status first, and you want to trade these pulse waves first, okay? And then from that point on, it doesn't matter how far away the market seems or unlikely it seems that the market's going to get to those prices. You place the ticket and walk away. and then you come back and you realize I'm in the market, and you've captured the entire move of that pulse wave, like we did in silver for the last couple weeks. All right. The next thing you're going to notice here too, if I can zoom into this, you'll see that you have your excuse me, this is your primary pulse wave buy trigger and your primary pulse wave buy signal. Obviously, if there's a green one here, then you're going to look to buy that. Okay. Same thing with the secondary signal. Same, here's your secondary pulse wave and your secondary pulse wave signal. Also, when you get those signals here in your primary pulse wave status, the ones that tell you to tighten up your stop regardless or what have you, this is what you're going to use right here. Tighten stop, trail open position, stop and reverse, sell short. That's what this is, okay? So you want to take a look at those. Of course, we still have the trailing stop and reverse right here, and we still have the primary pulse wave stop loss and reverse. All right, so if you're trading a primary pulse wave, this here is the initial stop and reverse for that pulse wave. Okay, if you're trading a secondary pulse wave, this is the column you go to place your stop and reverse for the secondary pulse wave. Okay, and again on the side here, we still have our entry price. This here is the price trigger for your CP WBOs and your Q waves and your 2-bar Charlies. Alright, this is the price trigger you will follow if you get a confirmed pulse wave breakout signal, a 2-bar Charlie signal, or if you get a Q wave signal. You're going to enter on this price trigger here. Alright, this negative momentum is very important. It's letting you know the possibility of a trend change or the market hitting a top. It's very sophisticated in picking that up and letting you know when it's time to possibly sell short a security. So even if you get a buy and that buy is triggered, you're going to want to place that that tight stop and reverse key right here. Whenever you got any kind of a negative sell signal or sell trigger, you always want to go over here and use this stop as your initial stop. Always. Alright, because it's telling you that it's possible that the market could be topping out and you don't want to be long and take on more risk there. You only be long if the pattern is going to continue and we're going to put in another leg up. But if not, instead of using these initial stops, whenever there's negative momentum involved, such as this indicator right here, always come over here and use this this tight stop loss instead of the regular initial stop loss. Always. Okay. Also, if you're trading off of a confirmed pulse wave breakout, a Q wave, or a 2-bar Charlie, you're going to be using this here as your stop and reverse anyway. You always use a stop and reverse when you're trading those. You don't use the pulse wave stops. Okay, always. All right, and here's this column for you here, and it tells you right here what that is. All right, so that's pretty much it. Those are the only additions that we have. Just be mindful of where to look for things in the sheet. The tabs are broken down. We still have most of the alerts and stuff here on the main page right here, but we also have a lot of things in the user guide tab and located within the sheet too. Your bot checks are still here. All right, when you get negative bot checks, you know that's telling you negative momentum has snuck into the market, whether you see it on a chart or not. We still have our crash alerts, our rally alerts, our high volatility bullish alerts, or high volatility bearish alerts, or just neutral high volatility alerts. That's still here within the sheet. Everything you need to make significant profits in the market is right here. So we'll do some hands-on training in the trading room. So I just wanted to post this video just to give you a quick walkthrough. All right, let's go shopping. You know what we need to do. We have a lot of things on our buy list this morning. So remember, take what you can and give nothing back. Don't be greedy. But let's go and let's pimp these markets. Peace out.